Here is an exercise that I wanted to do because listen, a lot of people over the years with gold, if they ask me about gold, I say, what's the reason you're interested? The number one reason is people say, it's safe, it's secure, it's a store of value. So I said, well, let's take a look at that. So notice the chart that is in front of you. We just went over of these last 3 years or so, it's gone parabolic. Well, we have another chart that we want to show you, and this is from 2006 to 2011. And guess what? It looks almost identical as the one that we just went over. And the similarity, look at the end with a parabolic move that happened in 2011. I was here at that time. We were doing a blog at that time. And I remember I had several investors come in and tell me, hey, I would love to put my whole portfolio in gold and silver. Is that a good idea? And to which I said, I would not recommend it. Well, let's take a look at what happened following that August 2011 peak. The chart in front of you shows you gold, how far off its high it fell. And between summer of 2011 and the end of 2015, look at that. Gold dropped by almost 45%. And guess what? Silver was even worse. Silver dropped by almost 70%. Back in the 70s, gold and silver did very, very well, and especially late in the decade. And then from 1980 until 1999, a period of almost 20 years, gold dropped by almost 70%. Silver was down over 85%. So look, that tells us that these can be very, very volatile, especially if you're buying in when they have had parabolic moves, just like we have seen here. So the big takeaway is that when you hear gold everywhere you turn, you need to be a little bit cautious about how you proceed, because in the past that has meant that there have been a precipitous sell-off not too far around the corner.